Ladies and gentlemen, good morning and a warm welcome to VALMIERAS STIKLA SKIEDRA Investor Conference webinar. Today we are hosted by VALMIERAS STIKLA SKIEDRA Chairman of the Management Board, Mr. Stefan Jugel. As always, we will start with a presentation, after which we will hold a question and answer session. If you have any questions to the company representative, please type them in the question box that you can see in the webinar admin panel. Mr. Jugel, the floor is yours.
Yes, warm welcome and best regards from City Center of Riga from our side as well. My name is Stefan Jugel. I'm the chairman of the board of VALMIERAS STIKLA SKIEDRA, and together with me I have today Martin Blaus, our new finance director. We felt necessary to explain the results of 2018, which we released last week or the week before last week on December 6th, and that's why we invited to this webinar today. Here's our agenda for today. First of all, for all of you who doesn't know the company, we give some details about the company, its product, its customers. Then we would like to explain the 2018 results, which are now audited, give you an overview about the performance of the first 9 months 2019, and then we prepared some last corporate news about the company and upcoming events. On the left side down, you can download the financial results consolidated for 2018 and also 9 months results 2019. Short overview about the company. We consider ourselves as one of the leading glass fiber producers and its products in Europe. The company, compared to many other fiberglass producers in the world, are an integrated manufacturer. So we're producing from the yarn, which we are melting out of sand, till fabrics, coated fabrics, and customized products. The company has one of the widest range of products in fiberglass, and we are serving a lot of industries and geographical markets in the world. The company is a well-established brand since 56 years, and we apply in a number of industries which give us a promising growth potential. Short overview about the history. The company was founded in 1963 and had a constantly in development in producing fiberglass, starting 63 with marbles, and next important step was in the 2000s by investing 200 million in continuous melting facilities in 2001 and 2006. In 2012 we made a very important step and invested in 2013 in our UK facility to approach every market, and since 2019 we are operating production facilities in 3 continents and 3 countries in the world. Short overview about the range of products. As you can see in the little pictures, we're producing from chop strand till single yarns, till texturized yarns and rovings. This is a usual product portfolio of fiberglass producer, as we are located not in the center of industry at the edge of Europe, so we had to develop added value products. So we are also using our own glass to produce fabrics. We are coating these fabrics, we are laminating these fabrics, and we're producing mesh, needle mats, stitch bonds mats, and other products to get less independent on energy cost and the demand of fiberglass itself. The company is operating, or the company has 4 furnaces in Latvia. At the moment, we are operating 3 furnaces. The company is producing 3 different glasses. Number one, and the biggest quantity is our e-glass with a temperature resistance up to 600 degrees. Then in the last years, we developed HR glass, which we patented around the world, with the exception of the US, which has a temperature resistance up to 800 degrees. And then our unique selling point, in which we are market leader in the world, is our silica glass with a temperature resistance up to 2100 degrees. In general, we consider ourselves as not as the biggest fiberglass producer in Europe. We have a competitor which are producing much more fiberglass, but as you can see here, we have produced the widest range of products which make us less independent on customers, markets, market developments, and developments of specific industries. Talking about industries, we try to explain a little bit in which areas we are delivering our glass. As you can see, we are still producing part of our products as we call it internal raw material. So we're selling our yarn to customers, mainly weavers, other applications in the industry which are using our fiberglass for textile applications. Then our market of us, but I will come later to market shares, is our product portfolio for thermal insulation and the industrial applications, where we consider ourselves as a market leader in the world. Then we have a small part in automotive industries, mainly for insulation applications in combustion systems. And big and growing market for us is the market of smoke and fire protection. And on the right side down, we also producing a little bit for architecture and building industry. In general, we are, as you can see, we are quite diversified about individual customers and industries, and we are really proud of our know-how in aerospace and thermal insulation market. Coming to the main point, talking about 2018 results, we illustrate here on the left side the group results. The group ends with a net sales in 2018 of 114.2 million. This was a decrease of 9%, and with an EBITDA of minus 98.6 million euro, which is a quite negative EBITDA margin. The net profit of 2018, we ended with a 140 million, in which 56 million is attributed to the owners of the parent company. To explain a little bit why we end up with this result, have to go back to the history. As you know, that on June 17th this year, our Latvian company applied for LPP. At the same time, our US daughter company had to file a Chapter 11 in the US, and ultimately this leads us to the decision that we had to write down, or had made accruals for writing down our US investment completely. Today, we have December 16th to explain why we're ending up with such a late auditor's opinion. First of all, due to the problems we had in the US, and with negative results since beginning of 2018, we had several questions with the auditors about impairment of our US assets, about going concern, which delayed in the first two quarters in 2018 our audit process. And at the end, after filing Chapter 11 in the US, our auditors refused to give an audit opinion and to sign an annual report, which leads us at the end in our Latvian entity that we couldn't provide audited figures for 2018, which delays then our audit process in Latvia. At the end, we had to decide, Martin and myself, to finalize this audit, to expect or to accept a limited audit opinion for the group and for our Latvian mother company. And this leads us to a final audit opinion, which we published on December 6th with a quite extensive limitation of auditors confirmation. In general, shouldn't be an excuse. This was just for explanation. And in general, we as a management and myself as a CEO of the company, we are responsible for providing 2018 figures. And at the end, these circumstances in the US, in Latvia, and ongoing discussions about going concern leads us to this delay. And I myself, as the CEO of the company, I'm taking full responsibility for these delays. Talking about 2019 figures, as you can see, the group and our Latvian entity is recovering slowly from the write-downs and the problems in the US. The group ends in the first 9 months with a net sales of 99.1 million and the EBITDA of million. This is still not the level which we provided in 2016 and before, but as you can see, the situation is improving. The group's results are improving, and the company's development is going in the right direction. Our Latvian entity had the sales of 71.8 million in the first 9 months and provided a decent EBITDA of 13.6 million. This is 855,000 below the 2018's EBITDA, and this is mainly related to cash flow and financing issues in the first 6 months of this year, as we are providing big support to our US company by cash, by material, and also by management and labor support. The Latvian company itself ends in the first 9 months with a net profit of 2.8 million, which is a net profit margin of 3.9. To explain a little bit, give a little bit more details about 2018 results. The 2018 results are including a one-off non-cash expense of 95.8 million, which recognized the impairment losses of our US entity, and the group recognized impairment losses of 99.2 million. As you can see, if you deduct this from the results of Latvian entity 2018 and Latvian US operational net profit 2018, then you can see that our Latvian and our UK entity is providing in EBITDA and net profits, and most of the losses in 2018 are related to operational losses in the US and accruals for write-downs of the US investment and loans provided. 9 months 2019, the company is not financing. First, I have to figure out that the company is not financing anymore since June the operational losses in the US. Since the company in the US filed a Chapter 11, we are not providing any cash anymore. This in the US, the phase 1 operation is working, is producing their own cash, is producing, having cash in accounts, can finance completely itself. Phase 2 is shut down. The losses are ring-fenced. All losses which could apply in our Latvian balance sheet are already reflected in the 9 months 2019 results, and So US company is run independently by local management under the supervision of court and secured creditors. But as we are still a major shareholder in US, we have to consolidate our US entity fully, also if we are not really in control of this entity completely anymore. To give a little bit details about how much we are depending on US sales, we've prepared this graphics here. And as you can see, our Latvian and UK entity has a stable sales, is running at a stable level. And the red columns you can see here is the additional sales we had or turnover we had from our US entity. Since US entity shut down the phase 2 operation, this sales is declining and reducing at the same level as we had before investing in phase 2 operations. And as you can see, the Latvian sales were lower in the first quarters this year than the previous year. This was related to, first of all, availability of raw material, which we used to purchase from third parties, mainly from Asia in the previous years, and which we were planned to purchase from our US facility. As this production failed and we couldn't provide this material from the US, we had to reduce our production here in Latvia. Second big impact we had in the first half year 2019 was by providing cash to the US entity. We were struggling to generate the cash flow for our Latvian entity to provide spare parts, raw material, chemicals, so we couldn't utilize our production facilities 100%, even if the market was there. And nevertheless, since we shut down phase 2 operations and we ring-fenced the US entity from our European business, this production is recovering, and since September, October this year, we're running our Latvian facility at 100% capacity. Same as you can see on the EBITDA development, you can see Latvia and UK is providing stable EBITDA, even with under circumstances with cash flow problems, and first quarter and second quarter 2019, so we reach more or less the level of 2018's, and since third quarter 2019, you can see the losses from the US, which we are consolidating in EBITDA, getting slower and slower. We're expecting that US operation phase 1 is coming back to the same EBITDA level as we used to have before starting US phase 2 melting operation. And so the company approved, even during this difficult time, that even with these problems, the EBITDA is stable and the company can generate its own cash flow. Short market outlook. On the right side, you can see a world map with breakdown of our sales. Our biggest and most important market is the European Union with 96%. I think the previous year was about 63% of total sales. And US or North American market is decreasing as we don't have material available for the US anymore. So from June 2019, we're exporting material from the US, from Latvia to the US, directly to US customers. We don't do any trade business with our with our US entity anymore. And CIS still a stable market at a low level for us, and more and more important for us are other countries with total sales of 15%. Talking about the product mix, our biggest important and Also, highest profitable market is thermal insulation with a total sales of 34%, followed by building and construction, which is in our case mainly mesh products for house insulation systems, mainly used in Europe, but also at a small scale worldwide elsewhere. Then we still selling our fiberglass yarn as a raw material to customers, to competitors, with a total sales of 27%. And then we have a smaller but stable market share in composite, architectural, and other businesses. Talking about latest corporate news, September 16th, in the last webinar, I mentioned that our two financing banks, SEB and Danske, terminate our loan agreements with the company. And we, on September 16th, we conclude a forbearance agreement with both of these banks with a termination time of 24 months to refinance the existing loan portfolio under one contract. This is a forbearance agreement. That means all loans are due any time, and as long as we are fulfilling the forbearance requirements, this contract will be forbeared by both banks. And the LPP plan is now in place since October 17th, 18th, approved by the court. We are running now LPP plans since 2 months, which means we have to fulfill forbearance agreements, mainly payments to unsecured creditors, which we conclude payment 24 months with the exception of LBBW Bank, and forbearance fee payments to our banks, and from January 2020 forbearance payment of $500,000. The LPP plan, for all of you who doesn't know, not really familiar with the Latvian insolvency law, we prepared these graphs here. So we file LPP on June 17th. The company in Latvia file LPP. Then 1 day later, the court approve this application. Then during the next months, we file or we conclude settlements with unsecured creditors. We conclude this forbearance agreements, which I was talking about. We signed agreements with the banks, and as supervisory concluded for the LPP plan, and on October 18th, the court approved the LPP plan. So from October 18th for the next 24 months, the LPP plan is now our Bible for acting for the company, for our planning. So during this time, we have to fulfill the forbearance conditions, which means paying down unsecured creditors, paying to secured creditors, and also attracting additional investments in the company. Talking about the debts which we filed in the LPP plan, in total, the company on June 17th had a total debt position of 118.3 million euro, which can be stripped down to 70.9 million, quite small amount to unsecured creditors of the plan, 19.4 million euro with related party or parties which are considered as related party to the company, and the total debt position of two secured creditors, which in our case are two banks, of 91.1 million. The clear target of the company is to restore the ability of the company to pay this debts down. As I said already, we're having a 24 months payments plan with unsecured creditors, and also during this forbearance agreement means in months 25, which is November 2021, we have to refinance our remaining debt position with the banks, and the clear target of the company and the management is to come during this time in a position that we are investment grade and can easily refinance this debt position. Some insights about the company and the industry. We know that fiberglass itself, fiberglass industries is not really well known in the world. So we prepare a little bit of graphs to give some insight about our dependency on industry, on industry demands. As you can see, the black line is the index for demand of rubber, plastic products, other reinforced products, and fiberglass. And we compare this with other industrial commodities and VTI, crude oil prices and demand. And as you can see here, fiberglass itself is a growing industry, is a stable is an industry with a stable demand of products, and even during crisis situation which we had in 2007, 2008, and the industry shows that the demand is growing. Fiberglass is still replacing other materials in our customer industries, and we're expecting the same development over the next years, even if a industrial or financial crisis is coming, which a lot of experts are talking about. Why we are so confident about this, one of our biggest markets for our raw material sales and also mesh sales is the insulation of houses. And as maybe you have followed the discussions during the last week, EU is going forward to become climate neutral economy since till 2050 with efficiency targets already for 2020 and 2030. And as we can see in a lot of industries of our customers, becoming climate neutral is a big topic for us. So we're expecting more investments in house insulation, in improving of buildings, but also in our customer industries on the industrial sector to improve energy efficiency, recovering of energies, and that's why we're looking forward also for a higher demand of our products over the next years. Our mesh products and also other fabrics for thermal insulation are covering 50% of the company's sales to Europe in the first quarter 2019, and this is a positive development for the company in which we are participating in major investments in public sector, but also in industrial investments. The prices for these products been stable for the first 9 months. During October and November, we face a little bit sideward development in this industries, also a small declining of prices, but in our opinion, this is not related to demand for this product. It's more related to capacity which was erected during the first half year in 2019 in Europe. About the company and LPP arrangements, I mentioned before that the company has fulfilled several requirements during this LPP process. One of the requirements is 30.5 million capital inflow into the company, which was agreed with our secured creditors, with our banks, plus an additional 5 million financing line in place for investments and inventory financing. So to fulfill this, we can consider several scenarios in the company by additional capital sources. This 35 million are, according to the LPP plan, 100% dedicated to pay down our debt position, which brings us already forward to reducing our debt position and brings us more direction of investment grade. but with the cash flow and with a setup with maybe additional investors in the company, we also working on efficiency improvement scenarios, which mean in our case automation, getting less of availability of skilled labor force, and also develop our EBITDA margin in the company. So the management developed a management scenario over the last weeks for the time after finalize LPP process, and we defined several measurements in energy efficiency, in automation, in improvement of product quality, in widen our product portfolio, which can lead us with the 50 to 55 million estimated budget to double our EBITDA level. This is what we are looking forward at the moment. The management, and especially myself, we're working on with additional investors to talk additional investors to fulfill the LPP requirements, to bring additional capital in the company, and at the same time also we're working on the financing scenario for doing the necessary investments here in our Latvian entity, in our UK entity, to improve our EBITDA level and make the company much stronger and much more competitive than it used to be before US investment in 2017. These are my comments on the 2018 results, 2019 results, and outlook which we can give. I'm happy to answer your questions, and please feel free to raise your questions.
Thank you for the presentation. Before we start answering the first question, I would like to remind all of the attendees that questions can be asked using the webinar admin panel. So let's proceed with the first question that we received. What will be the future of UK plant after the Brexit? Stefan, please.
So we're planning no major changes for our UK plan after Brexit. At the moment, looks like that we're having a Brexit soon, and a Brexit agreement. We did our homeworks already a couple of years ago when we transferred part of our production from the UK to Latvia. We're expecting no bigger impact on our product and customer demand for our UK facility, especially in aviation and composites, as this company is long-term qualified with the customers, and we qualify to do countermeasures. We qualify part of our yarn to use it in aviation and composite, and we have done our homework. We have done the maximum we can do. We're talking constantly to our management, local management, what could be the impact on Brexit for the company. At the moment, is for the UK company is not really clear which direction it's going to go. And most likely scenario will be that for a certain time the UK government will cover and reimburse additional taxes which maybe are coming up.
Thank you, Stefan. Now let's proceed with the second question. Updates on Latvia's furnace reconstructions works and utilization ratios for UK Latvian plants.
Talking about the furnaces, actually I forgot to mention, this was a really, sometimes I forget to mention positive things. The furnace number 3, silica furnace, was reconstructed in a record time of, I think, 28 days since December 3rd. We are producing on the silica glass furnace, and at the moment we are already above the level of output level which we had before furnace reconstruction. That our target is to increase production capacity of the silica fiberglass furnace by 38% when we are utilizing furnace completely. And other two furnaces are running full scale. Furnace number 1 is running as budgeted. Furnace number 2, which is now approximately 1 year before reconstruction, is running actually at a higher level than planned. All the other facilities are running full scale, weaving, coating, working 100%. The only spare capacity we're having at the moment is production of our mat lines.
Thank you. The next question. Any first indications on 2019 12 months results?
Yes, the 9 months results I presented before. Talking about fourth quarter of 2019 is usually not in our fiberglass business. Not the fourth quarter is not usually the best quarter. So we are expecting a small increasement of our EBITDA level and net profit level, but not 1/4 or 1/3 of the first 3 quarters.
Thank you. The next question. You stated that Valmieras Stikla Skiedra needs to raise 40 million by March 31 in equity and or debt. Can you give more details on these plans? Are you considering issuing new shares? And if yes, how many?
So at the moment we are talking. At the moment, we are talking to about several possibilities. As you know, we mandated LHV to support us in this project. So we're talking to existing shareholders, we're talking to potential investors in the company. As you know, we're having still this capital increasement in place, which was we thought we're using for our FPO. So at the moment, we're considering several options, talking about senior, junior debts, talking about equity. At the moment, there's no specific setup which can I present, and according as soon we're having a potential way we are going, then we're going to publish as soon as possible, maybe with a extraordinary publishing or additional webinar.
Thank you. The next question. When according to LPP, you have to attract those 40 million euros cash inflow, what is the weight for equity and debt?
Same as the previous question, I can't publish any details at the moment. Original was the idea was that 20 million will flowing in the company by selling phase 2 operation in the US. At the moment, this process, this M&A process in the US with an M&A advisor is still running. We don't have a LOI in place so far, and at the moment, I can't give any details how much money will come from the US by selling the US assets, how much will come from equity or other financing sources. As I said already, as soon as we're having details, we're going to publish this.
The next question. Reasons for underperformance in the US plant, what are they? Would other producers of fiberglass be facing similar issues?
First of all, I can just talk about the reasons and our investigation we have done after this investment fail. In general, as I said already in the previous 2 webinars, that maybe company's balance sheet and also organization wasn't ready for such a big investment, doing such a big investment at the early stage. Original, this investment was planned for 2019 to have done 2019, and at the end it's not always just one reason why it fails. So from the beginning we are running behind budget after we starting this this production in January 2018, we haven't been able to set up an organization to run this fiberglass plan. We had several issues, and then we came into a self-feeding process. Shareholders helps us a lot. The Latvian company helps the US entity a lot with additional cash flow, additional financing, but ultimately it was never enough to reach a production level which we expected. And at the end, we had to make the decision in June 2019 to shut it down, to stop cash flow, not risking our Latvian entity. If other producers facing similar problems, I simply can't answer. Always depends on the workforce available to start such a project, how many people you can dedicate 100% to run such a facility, to set up such a facility. Sure, cash flow, how deep the pockets are is also questions, how long you can finance a ramp-up process. But in general, I think it's possible to start a production in the US, to run such a production in the US, also at this place in Georgia.
The next question. Which outcome do you expect from Chapter 11 for the US entity? For example, sale of factory?
Also difficult to answer. All options are possible. In general, the company is generating sufficient cash flow that the company can come out of Chapter 11 by itself, could come with a settlement with secured creditors, but this also means that we need a settlement here for Latvian entity. Sale is possible as well. As I said already, the M&A process is running. Usually after LOI, then a stocking house process will be started in the US, and if the sales price is acceptable for the mother company and also for our secured lenders, sale is possible as well. At the moment, which direction this is going to go is unclear. US management is working closely with lawyers, with secured creditors, and with the court to find a settlement. The preferred scenario for all stakeholders of the US entity at the moment is a sale of the assets.
The next question. What are the procedure if you will fail to attract 40 million euro cash inflow till March 31st?
The legal procedure is quite clear. The 40 million are a condition of the LPP plan and also condition of the forbearance agreement with the bank. If you are failing, technically, the Latvian company's insolvency automatically, and receivable come. If you're asking me about likely scenarios, then I can say it's not in the interest of any of the stakeholders of the company that the company is going to insolvency and go into a solvency scenario, which can damage the reputation, can damage the brand name, can damage the relationship to our long-term customers. And from my perspective as a CEO of the company, a most likely scenario will be then additional settlement, opening of LPP plan, additional settlement with our secured creditors and our shareholders to prolong the period to raise this 40 million.
The next question. In your annual report, you state that an option to continue operations as opposed to asset sale, wind down of PD Valmiera Glass US Corporation is under consideration. Does that mean restarting the phase 2 operations in 2020?
It's unlikely that we are starting phase 2 operation in 2020. as the company, the Latvian entity, doesn't have a financing to start this operation, also not the organization. So a possible scenario can be, and in the annual report I stated the various options can be if there is no successful M&A process and sale of the US assets, then we also take in consideration to run phase one for a certain time and maybe teaming up with an investor in the US to start later on, keep the assets. This can be an option, but this is just the option in case the M&A process and the sale of the assets is not successful.
The following question: if you can, please elaborate what is the sentiment from your major shareholders?
Talking about major shareholders, as I said already in the presentation, they are supportive. They've been supportive during the ramp up of the US operations. They provide additional shareholder loans to Latvian entity, to US entity during this time. Or they're also supportive during this process in the US, either selling this US assets and they're also supportive for the process, raising the 40 million here in Latvia for the Latvian company. So we are closely cooperating with the shareholders, major shareholders, which is ultimately a German industry group. And I just can confirm that they are working or they're supporting all scenarios possible to bring to fulfill LPP conditions and bring the company out of LPP process as soon as possible.
Thank you, Stefan. At the moment, all questions are answered. Let's give the last seconds for others to post their questions. Thank you. As always, the recording of the webinar will be available in the Nasdaq Baltic YouTube channel and in company's announcement later today. Thank you, Mr. Jugel, for this interesting presentation. Participants, thank you for your attendance. See you next time.
Okay, thank you again for participation 1 week before Christmas and especially during this special situation of the company. We're looking forward to improve our efforts and our results in 2020, and would be happy to welcome you to the next webinar or to our shareholder meeting, which is taking place this week on Friday. Thank you very much.